Welcome. It's Data Trader Pro's nightly update. Just looking at the SPX chart. Well, we may have had our long-awaited reversal today. Trend days down has been about 9 or 10 days now already. So these are Heikin-Ashi candles, something like 10 days. Of drop off the last local high. Yeah, so things are we're getting extended to the downside. Obviously, VIX had pierced its upper Bollinger Bands 2 or 3 times already, and on the daily candles, it had stopped going up a day or two ago. So that's sort of the sign that things are getting long in the tooth, and at least maybe a mean reversion trend is in play. So yeah, so this is the daily chart. We're looking at the slow stochastics on SPX, bottomed. PMO, which is a price momentum oscillator, not quite bottomed. It could go a little lower. MACD's getting kind of long in the tooth. So, and RSI is very much oversold. So yeah, we expected a bounce, and we got a typical of a reversal day. You get a lower low early on in the day, and then a sharp V bottom. So there was a high volume buying at the lows today, and NASDAQ rallied probably 160 points. S&P rallied, roughly 45, 50 points off the low. So yeah, so we like how that's shaping up. We definitely saw the block trade activity that supported that, and we'll go right to the site. Our sectors, certainly biotechs tend to be one of the leading stocks in a rally of late. Healthcare, all the stuff that really rallied when the market was going up in the last few years. Curiously, we had a decent rally in energy. Oil wasn't up a lot. Nat gas was certainly down off its highs, but the broader energy space was up. So, in terms of our market map, the advanced declines were healthy. NYSE was positive. NASDAQ was positive. The indices themselves were much more positive than the exchanges. So there's a little bit of a divergence there, but after such a sell-off, I don't think that's really abnormal, because they're now buying back all the stocks that they sold off. So this sort of trend where the exchange level advanced declines are a lot different than the index advanced declines is maintained. But I kind of think that's what you're going to get when you have 9 or 10 days of selling, and then people are going to seek value and seek the the high flying stocks to get back into. So NASDAQ was heavily bought up off the lows. Certain Dow stocks were very heavily bought up. Russell was bought up. So we still have an extreme on the new 52-week highs versus new 52-week lows. We have our lowest reading in some time on the 52-week lows, but we'll have to watch for that to improve should we continue this rally. 52-week highs, obviously coming off such a low, we're not going to get a lot of new 52-week highs, not until we've had, we start to get back into the 2100 range on S&P. So pretty normal. The VIX space bled off. Let's have another look at that, actually, because there's an important development here. We like to watch the volatility of volatility, which is the VIVX, as a leading indicator for VIX. It's like the VIX of the VIX, and when the VIX of the VIX starts going down before the volatility indices that tends to be a precursor to a drop, fast and sudden drop in volatility. The only fly in the ointment as far as volatility dropping quickly is that we still have high backwardation, which means the front month future is higher than the near month future. It's actually dropping a little bit as we speak. So, I'll tell you about the volatility space and the landscape there, because it's important. We have a holiday on Monday, Martin Luther King Day, coming up. VIX expires at open on Wednesday. So really, this is Thursday evening. What we've got is all of Friday and all of Tuesday. So even though we're Thursday evening, we really only have 2 trading sessions left before VIX expiry. We're at a point where VIX futures need to make a decision whether they're going to sharply correct lower or they're going to maintain these levels over the weekend. And I'm not sure which way it's going to go, but certainly the drop in volatility space today looked like we're going to get a sell-off. But I don't think it'll really happen in earnest until tomorrow. So watch the volatility space closely. Watch the volatility to drop further. Watch all of these percent gauges to keep dropping. If that doesn't happen and the backwardation stays high, this correction that we started 2 weeks ago is not done yet, and the markets still has a mode of elevated volatility because there is probably more downside or low end of the range chop to come. So volatility hasn't cratered and hasn't said, okay, we're full on boogie rally mode right now. Certainly that's not the case. So we see the beginnings of that, but we haven't seen the follow through yet. Watch this gauge, the backwardation move into contango. We're watching for that because otherwise volatility players and SPX options players, from which the VIX is derived, are basically saying there's still reason to be cautious here. And having a volatility, having a VIX of 24 with 2 days to expiry, it's indicative of the fact that people are not ready to throw in the towel on this correction yet, I guess is the best way to put it. Breadth was bullish today, so we basically reversed from our lows, and the lows on the volume delineators were only slightly bearish, actually neutral on all of them, and we ended up the day quite green, quite bullish. The advanced decline delineators were slightly bullish, not heavily. The Russell was the most at about 7.5 to 1 positive, although the Russell trend was fairly neutral, I would say. The other trends, NYSE and NASDAQ, were bullish, so in line with a good price surge upwards. The trend day indicator gave us a neutral range day because the first part of the day was choppy, and actually the first move of the day was down. After that, at about 10:15, 10:20, we reversed sharply off the lows, and they bought the high flyers. This is an index again of the key market moving stocks. There's over 100 stocks in this index, and it is the dollar weighted net volume of our own basket of key market moving stocks. So basically what happened was they kept pouring money in. So despite us taking a little bit of a drop at the end of the day and the volatility space remaining somewhat high, it didn't crash, in other words. That's a very strong reading. So there was a lot of money pouring into those key market moving stocks. Our intraday version of the McClellan, the DTP MCC, was again, there was a little bit of chop. Obviously we had a lower low today in the morning, and then we pulled up hard from there and chopped around a little bit and then continued up. So as long as these two charts are in alignment, in agreement with each other, there's no divergence between them, we feel that's a reasonably healthy move up so far. Net issues, 1,000 positive. Net volume, nice and positive, so that's good. In terms of the block trade space, we had we definitely had follow through from some of the trades at close yesterday. So you can see that we had our cluster of trades at close. Price started to rise, and then we had our drop during the day, and it was bought. You saw that on SPY. So they were buying these, and as soon as price got above our demarcation line of, you know, high 188s, low 189s, price just rallied. So, you know, we got up to 191 or higher in SPY. Yeah, so that's the kind of follow through that we see. When you notice on the chart that something like this comes in, and it's not on the price line, like these two guys, these are dark pool prints that come in late. Dark pools do not have a requirement to post their trades live in real time. It depends on where they originated. If they're overseas, they may have up to 24 hours to report. This was obviously, you know, not 24 hours later, but may have been very late after hours yesterday or very early pre-market in the morning, because the price is in line with these levels. So, and this one was actually quite late, because if we look at 188.55 price level, that was way back in here somewhere, perhaps, or even here. So that's a very late print. This is a late print, and everything else is real time. So what do we have today? We had what looks like more buying here, but again, so we moved up off our lower levels. We have a demarcation line again here. Let's see if we can mark that a little under 192. We're going to be bullish above there and bearish below there. On the Qs, roughly, you know, 104.50 or something is going to be our demarcation line, and oops, I'm going to have to erase that. Yeah, and then let's go back to IWM, and we've got some prints down here at about 101.72, roughly that area. So these may be more buying, but we're going to have to see if price holds these levels. If not, going to be bearish and a retest down of the lower levels, down around 100, 150 level on IWM. Let's have a look at I want to look at the volatility ratios. So what we're going to do is we're going to go to daily volatility ratios. And the reason we're going to do this is we're going to see, using volatility ratios are I think, an important part of assessing the volatility space, because VXST is the short-term version of the VIX. It's the 9-day version of the VIX. The ratio of the short-term implied volatility to 30-day implied volatility. So when this gets up to the upper Bollinger Band, you tend to have a reversion back to the midline, which is I guess the mean, right? The Bollinger Bands are based on a 20-period SMA, and there are 2 standard deviations of that. So you can see whenever you get a touch of the upper Bollinger Bands or lower Bollinger Bands, you tend to at least mean revert. You may extend the move all the way back, and so on, back and forth, up and down. When you get it pierced, you tend to at least go down to the middle and often the bottom. So eventually it makes it back to the bottom. So volatility is heavily mean reverting. When you use a ratio of different volatility, different periods of implied volatility, you can really build an accurate picture about when volatility is overdone to the upside or to the downside. So right now we're in the middle here. So VXST was underpriced relative to VIX, and it shot up because we had our strong moves. But it's closed. Obviously volatility has been dropping, so we're closed somewhere around the middle on that. VIX to VXV is 30-day implied volatility to 3-month implied volatility. When this gets up to the upper Bollinger Band, we tend to find that the market reverses. Up here, we travel bullish down here at the lower Bollinger Band for volatility, and then bearish for volatility up at the upper band. SPX is relatively oversold relative to the VIX. here. So we saw it hit the Bollinger Band and start to turn up. Whether that continues remains to be seen, but that's the condition of the market now. Volatility got quite extended to the upside relative to the move in the SPX. Ratio of the volatility of volatility, VVIX to VIX, same thing. The volatility is actually low relative to where the VIX is now. But I expect that to mean revert to the middle simply with a drop in the VIX. The VIX doesn't actually have to move much here. It's already dropped. It's down about 8%. So I expect the VIX to follow through, and this will mean revert to the middle. This is a ratio of the volatility futures front month to near month. And you can see that we've spent some time with the front month a fair bit above the near month, which is why you have backwardation. And this is starting to drop a little bit. So we saw that backwardation drop a little bit today, but still it's holding higher levels. So I would think that that should continue with our theme of volatility dropping, especially towards the weekend, before a long weekend, just before VIX expiry. So that's what basically we expect. We expect volatility to drop, and 3 days of long weekend is going to take care of some of that volatility bleed for us, and the market should continue a mean reversion rally at minimum. That's it. I'm out of steam, and thank you very much for joining us. Data Trader Pro, January 14th Market Wrap. Good night.